Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. We've been so busy commenting and speculating on what we heard from the Q4 earnings and so much new info about the company that it's only 5 weeks or so until Q1 2022 is wrapped up. And then we'll go through all of this again. Delivery numbers, etc. Except I haven't heard anyone talk much about this quarter. No one has ever drawn much excitement towards it. We were actually expecting it to be somewhat disappointing, as costs would have been higher due to the new factories coming online, except that doesn't appear likely to be a thing now, does it? Elon has even announced the opening party for Texas on the 7th of April, so we can only imagine the official opening is around that date, possibly at the start of April, as Elon did initially say April the 1st, only to realise that was actually April Fool's Day. Whether intended or not, it was actually quite funny. We also aren't expecting Berlin to come online this quarter either. Disappointing, I know, but don't be too distracted. Don't let Wall Street get you down about the stock. The market is feeling very depressed right now and still punishing Tesla. The thing is, Tesla continues to outperform the market's expectations. And despite not having the 2 new factories online this quarter and having fewer deliveries, is perhaps what Tesla is being punished for. But these new factories aren't going to be able to hurt profit margin either. You see, the new factories could be running at a loss to start with, or at least lower margins. It's not that Tesla can't ramp up fast enough. They'll be limited by the chip supply they have available to them. Therefore, this will hurt margins until more chips become available, which they very likely will. Therefore, we could actually see quite a profitable Q1. Don't forget, in Q4, we just saw all those extra expenses in selling general and admin, potentially as high as 700 million, which won't be in there this quarter. This is going to have a huge impact on profits. We should also see profit margins up much higher, mainly due to all these price rises from last year catching up and further adding to profits. We noticed this in quite a major way last quarter, and it should be felt even more so this quarter. Some prices of some models in some markets are up as high as 20% over the year. In addition to that, we have further ramping up of the high-end S and X, which will also increase the average selling price somewhat. Would it be unreasonable to even think that we could see profit margins as high as 32%? I think so. We are expecting more ramping to be coming out of Fremont. The main reason I think for this is Tesla freeing up more 2170 batteries as the standard ranges are using LFP batteries, thus improving battery supply and being less battery constrained, also implying the Model Y will be more ramped up than the Model 3. We were told Fremont should expand 50% this year in production. What a jump from what is the oldest facility and the only non-purpose built facility out of all the vehicle factories. Yet 22 years later, since Tesla bought the fab, they're still able to improve production a further 50% year over year. That is a huge improvement in efficiency. And the numbers like we've seen what China is capable of, we're hearing around 68,000 units produced in January. That many already in the first month of the quarter. Whoa, this is likely the start of the new batteries that Tesla are receiving from CATL up the road. Thus likely also lower cost, saving in a lot of transportation and likely also a lower production cost too. I know February is a shorter month, but perhaps March can make up for it, and China alone could reach 210,000. My previous estimate was 200,000 from China, but I will explain why this may be higher at the end of the video. We don't know to what level we might expect to come out of there. We have a good idea of how many batteries CATL will have, and we have a good idea of what the run rate Tesla are capable of there, or what we've witnessed in the past, and they happen to be about the same. Something in the region of 1.3 million units a year. I haven't done a forecast for the earnings for Q1, but if you'd like me to have a go this early on, then let me know. But it should hopefully still be a good jump from Q4 one way or another. It was about this time of the quarter last quarter when I did my base, bull and bear case. And if you recall, my base case was just 1,000 deliveries off the actual number. Let me know if you want me to cover all 3 cases again. One more thing though, I think will help, is this quarter will have a major correction with the trailing 12-month PE ratio. You see, around Q1 2021, Tesla had only recently broken even still, and profits were low. Q1 2021 earnings were only $438 million. We're about to replace that figure with Q1 2022 for the trailing 12-month earnings. Tesla is currently being valued on the PE ratio from the trailing 12 months, now totaling $5.5 billion. If Q1 2022 earnings is, for example, $3.5 billion, then this changes our total to $8.5 billion, a 55% increase in trailing 12-month earnings, which would thus have the same effect on the trailing 12-month PE ratio, reducing it down from 164 to 96 at the current stock price of $805 at the time of this video, because we replaced the $400 million of earnings with $3.5 billion. That's a big difference. Except this isn't a quarter sometime next year. We're talking about the current quarter that ends next month. This is soon. Everyone has been too distracted with what was said on Q4 and the progress of the new factories and all the macro issues that once again the existing factories have snuck up on us and surprised us. That Shanghai factory is always surprising us, capable of 4 times the capacity we were initially told and ramping up there quickly, yet the stock price is lower now than over a year ago when this factory first opened, and despite it doing so much more than we thought, we're still in a time of a lower stock price. Do you get it? Tesla are likely capable of 4 or 5 times as much capacity from their factories than we thought when the stock price was higher. I'm continually looking at different angles and ways to value Tesla. I don't know how many of my videos end up pointing out just how low the stock price feels, but it does feel low to me. I don't say this as a complaint. I'm not frustrated or angry and shouting at the market to buy more Tesla. I'm grown up enough to understand the stock price will not do what you want it to do. I'm merely pointing out how I feel about the stock price based on my research, and I'll use that knowledge to my best ability, likely by attempting to build a larger position in Tesla. Of course, this is not me telling you to buy Tesla because it's cheap either. It may always get cheaper. I bought some more when the stock price was $780, but we all have different strategies and are in different positions with different targets. What it is I'm trying to point out is that one day the market will likely catch up and realize how cheap Tesla stock is, and then we'll all make a good return. I know it sounds trite, but there's a reason everyone says it for your shares. If you're holding for the next 5 to 10 years, then it's of little consequence of how the stock is performing today. Unless, of course, you're still building your position, in which case it means, in reality, you want the stock price to go down. That is, in a sense, the rational thing to hope for. But emotionally, we want validation that our pick has won, and that we were right, especially very much so with a stock like Tesla, where there is so much negativity and FUD against it. The media don't like Tesla because they're not an advertiser, aka a customer, and after the way the media has treated Tesla, perhaps if Tesla ever did advertise, then it would not be through the conventional forms. In fact, I would say that most of us would agree that if Tesla started advertising, then it would not be like any advertising we've ever seen before. And then the government don't like Tesla because Tesla spend very little in the way of lobbying or donations. Despite having to deal with these 2 headwinds, we're still here today. So now Tesla's stock price is down and we're all waiting for an event to boost it back up. We've been waiting so long that it won't be too long until the next quarter actually rolls around. There's a high chance that this quarter is particularly good too, due to those reasons I mentioned. The higher margins and more ramping, and potentially as much as $700 million less in OPEX, Tesla hasn't stopped getting stronger and growing in other areas just because we are waiting for these new factories. I keep telling you, this company is not messing around. This is an important quarter then. But for some reason, every quarter seems so important. There's always something. Alright, but this could be a big quarter. At a guess, perhaps another 50% increase in earnings compared to Q4. But surely, if not quite that high, then even if it was just 30%, i.e. just $3 billion in profits, it would be enough to start moving the stock again. People seem to have forgotten how much this company is valued as a car company, and that when the profits jump that much, it reminds them again just how much Tesla is capable of growing and how valuable it truly has become. And what happens when you have a huge margin on large capital items? That gets better. Now, I do have one other theory, that despite the fact we don't have these new factories online this quarter, well, that perhaps there were chips that were earmarked for those factories that can now be used in other factories such as Fremont and Shanghai. China is capable of these really fast production speeds we've seen, and CATL has the battery supply necessary. Perhaps then, that any lack of production from these new factories would just be made up for in Shanghai and possibly Fremont. The chips and possibly batteries, or scarce parts, can be used elsewhere. Anyway, I will start to work on my earnings forecast for Q1, as I think it could be good. Tesla's stock price appears to be being punished more than the others. I hope this Q1 reminds people again of Tesla's power. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.